Hey everyone, Tommy with ReMax here. Thanks for dropping in. Lately, buying a house or condo seems to be the big buzz. Is it coming up in your conversations? If you're thinking about it and you're curious if you can afford to make the move, please stick around. It's all about down payments today. Now, hopefully you've already caught my video, What's My Rent Worth? If not, check it out on YouTube or hit up my website after catching this vid. Right now, let's dive into down payments to give you an idea of what a down payment might look like for you. All right, so let's get into this. I think everybody knows what a down payment is, but just in case, let's just bring definition to it. When you're financing something and a bank or finance company is going to lend you money for it, typically you're going to have to put down a little bit of money towards that purchase. You're going to have some equity, as they call it. So you've got your little bit of equity over here. The bank gives you the largest sum, and together you get to buy the object. So you made a down payment, you have equity in your purchase. Same thing on a house. Okay, so we know what a down payment is, but how much do you really need? Well, honestly, you could need anywhere from 3% to 25%. On $250,000, that's going to equal about $7,500 to about $62,500. Where do you fall? Let's dive into that more. But to do that, we've got to talk about the type of mortgage you might get. So loan products, what are they? Well, there's about 5 common ones out there that we're going to talk about today. I think most people have heard of what they call a conventional loan. Okay, and I think everybody's kind of heard of an FHA. FHA, everybody kind of mixes up and thinks that that's a first-time home buyer's product, and it's not specifically for first-time home buyers. Okay, there's also a VA loan. There's what they call a USDA loan. USDA is going to be for more of the rural areas, and then there's also what they call a jumbo loan. Now, a jumbo loan targets the higher end of purchasing, being, depending on the area you're from, $550,000 or above. Now, that's just an estimate. Like I said, that number differs depending on your area. So now we're going to go back through these real quickly and say what we need to qualify for the loan and what the down payment would be. A conventional loan is one of the most popular mortgage options. It does require a 620 credit score. Now, if you don't have a 620 credit score, don't run away. There's another product for you. It's called FHA, and we're going to talk about that next. Okay, back to conventional, 620 credit score. They only require 3% down. So that's at $7,500 on $250,000. That's pretty affordable. Typically, your interest rate on a conventional loan is going to be a little bit higher than an FHA loan. That's the next one we're talking about again. You must purchase mortgage insurance if you're putting less than 20% down, but it can be removed once you have 20% equity. Okay. Now, all your down payment can be a gift. That's awesome. That means that mom and dad can help out. Okay. And with condos now, in some areas, it's pretty easy to finance a condo. In Florida, in South Florida here, it's a little bit different. We don't have a lot of what they call FHA approved condos. So there's a special list and a special process they go through. So condos in general, depending on how they qualify, require 3% to 25% down. Again, you can use a conventional loan and potentially have a 3% down payment on a condo. Okay, cool. All right, let's get into FHA now. Whether you're a first-time home buyer or a repeat buyer, the FHA product might be right for you. It was actually designed for low to moderate income borrowers who may not qualify for a conventional loan. So it was designed with what they call lower qualifying requirements. Okay. What this means to you is, to start off with, you can carry a little bit more debt than you can with a conventional, because it allows for what they call a higher income to debt ratio. Secondly, having a bankruptcy or foreclosure in the past, that doesn't mean you can't qualify for an FHA loan. That bankruptcy or foreclosure does have to be 2 years from the discharge date though. Okay. Third, credit scores. You can qualify for an FHA loan with as low as a 500 credit score. Okay, now we're going to talk about this in 2 tiers though. And sorry to be covering so much so fast. But let's start off with a 580 credit score. If you have a 580 credit score or above, you can actually come in with a 3.5% down payment. So take a look at those numbers. On $250,000 loan, you need $8,750. Not bad at all. Now, like I said, they do allow for 500 to 579 credit scores as well, but you're going to need a 10% down payment. So you're going to need a little bit more money in your pocket. Okay. The good news is all of your down payment, or even part, whatever you want to do, it can be a gift. Okay. Another good piece of information, a benefit to you, is typically the FHA loan carries a lower interest rate than a conventional loan. So that causes the payment to be a little bit lower. But if you're putting less than 20% down and you're using the FHA so you can, then you're going to have to purchase mortgage insurance protection, and that is required for the life of the loan. Okay, next, condos. Yes, FHA does condo financing. That's your straight answer. In South Florida, really, FHA does not do condo financing. Okay, as I spoke of earlier, there's an FHA approved list of condos. If you check that list, like I did this morning, just for the South Florida area, there is only 10 approved projects between Miami-Dade and Broward. So in the South Florida market, FHA is not your answer. With that being said, if you're watching from other areas, the list is expansive. Okay, so check with your lender. See how FHA is in your area. Let's quickly recap now on FHA. It offers lower qualifying requirements, lower down payment requirements, lower interest rate, but does require MIP. Okay, it's really overall a very good deal, especially if you're a little bit of a challenged borrower. Okay, so check it out. Next up, VA. Now the VA loan is really an exciting product for active duty service members, veterans, and eligible spouses. The minimum credit score, 580 to 620. That's typically set by the lender. The real exciting part about this though is 0% down payment. Not 3%, not 3.5%, but 0% down. Awesome deal. Also, no MIP insurance, no mortgage protection insurance. Again, another awesome feature. There is what they call a funding fee though. There are some exceptions for people with disabilities, but the funding fee, it can be paid up front or it can be rolled into the loan. And the funding fee depends on the type of VA loan you're getting and whether you're the first time user or a repeat borrower. I can say that. Okay. Then as far as any down payment, if you decide to put down a down payment, that can be totally gifted. As far as condos go on a VA loan, the condo project must be approved, just like FHA, except that like in South Florida, the list is much more expansive. And also you can go and try to get a condo project approved, but that can take about 45 days. Lastly, we're going to cover the USDA loans, beefsteak loans as I like to call them. They are designed for low to moderate income borrowers in designated rural areas. Okay, so inner city, probably not going to happen. Again, just like the VA loan, the minimum credit score is set by the lender, and typically it's a 580 to 620. Okay, the minimum down payment is 0 again. Awesome. Typical interest rate is a little bit lower than conventional loans, and your down payment, if you decide to use one, can be a total gift. Again, no MIP, just like the VA loan, but there is what they call a guarantee fee. Okay, to recap, conventional financing, 3% down, 620 credit score. FHA financing, you can do 3.5% down with a 580 credit score. Even a little bit lower, call around and talk to your lender about that. Okay, keep in mind FHA is not going to be your go-to choice for condo financing in South Florida. VA financing, 0% down, 580 credit score. That credit score is set by the lender. Check around. USDA, that's going to be 0% down again, and again 580 credit score set by the lender. Check around. Now, we didn't get into jumbo financing too much. What I wanted to tell you about it is 5 to 10% down, usually requires a 700 credit score. That's a product you definitely want to contact the lender directly. They all differ a little, okay? Now, if I've helped you out, please hit like before you exit the video. Feel free to give me a call with any questions, 954-566-0355. I do really appreciate y'all spending time with me and getting this little lesson, as we'll call it. I'll talk to y'all later. Thanks so much.